Hello, everyone. Good evening. Good evening. Good evening. Welcome in. Welcome in. Could I get a mic check real quick before we get into it? Popa Vlad, what's going on, my man? Thanks for joining us. Sigma, all good? Awesome. Sigma, welcome back. Happy to have you. Happy weekend, Denisha. Madara, hello. Olawale, happy Sunday, my man. Thanks for joining us. LN, hi Dylan, hello, hello. All right, awesome. Thanks, Denisha. All right, all good. So let's go ahead and get into it. Hope everyone's had a great weekend. Looking forward to kick off a productive and prosperous week. So with that, actually, I need to accommodate the settings with OBS real quick. Excuse me. Just share the economic calendar. All right. All right, so for some reason, not able to get the economic calendar loaded up. So no worries. We'll go ahead and get right into the trading view and I'll just talk about it. You guys can pull up the same information here on Forex Factory. So just looking at the economic calendar for this week, some things to have in mind. We do have FOMC coming up on Wednesday and high impact news drivers every day this week. So I'm really looking forward to a volatile week. Give us a lot of trading opportunities. So with that, keep in mind, like I said, FOMC and volatility the entire week. So like I said, overall, looking forward to a great week in terms of opportunities. So with that, let's go ahead and get into it and discuss what opportunities we have ahead of us. So with that, we're going to go ahead and get into our intermarket analysis, starting with dollar index, transitioning into bonds, do some foreign exchange for our Forex traders, and then also get into indexes as usual. So with that, let's go ahead and get into it. Ryan, what's up, bro? Thanks for joining us. Awesome. All right, so let's get started here with dollar index on a weekly chart. I want to refer to something on a monthly real quick. So we have been looking at this BISI here, buy side imbalance, sell side inefficiency. We've traded down into it and repriced it beautifully. So what's interesting to note here is how we're seeing that the monthly candle is traded into that sell side and inefficiency as we expected, but now we're seeing a retracement higher, trading above these lows. So that's something significant. We could be seeing support inside of this inefficiency to go higher. For those of you guys that have been with us longer term, you guys know our longer term outlook on dollar index is bullish, just simply looking at the monthly and 3-month order flow. We are seeing higher prices and bullishness on the higher time frames, and I'm seeing this as a retracement. So keeping that higher time frame in mind, what I'm looking at, that'll give us some more context going into these lower time frames. So here on the weekly chart, beautiful delivery down through that sell side liquidity as we expected, and then we had last week's trading, which ended up being an up close candle. I told you guys last week, looking at the daily chart real quick, one thing I wanted to emphasize is last week's trading was 50-50 to me, because reason being is that we had this weekly BISI here, fair value gap below market price, and we're bearish. But we also had a accelerated expansion down. So looking at the daily chart real quick, we had a bunch of inefficiency or SIBI on the way down. So the market could have repriced higher to retrace or continue lower into the fair value gap. And if you guys have learned anything with your time here with me in these Sunday streams, is that we do not do 50-50. I'm not interested in 50-50. Oh, the mouse. Okay, good. All good, Abraham? All right, I got the mouse up. Apologies for that. Thanks for the update. Okay, momentum trader cursor. Awesome. All right, yeah, Abraham, we need to get that fixed, my man. That's no good having no cursor, brother. So get in touch with me about that after. So like I was saying here, we don't do 50-50. We had all this inefficiency here on the move down, and then we could have repriced higher to retrace or go into the weekly fair value gap. So as I was saying, we're not interested in 50-50. That's not something I'm interested in doing. So I told you guys I had a neutral bias. And then obviously the market ended up tipping its hand that we were going higher. And then we'll drop into that as we get into the lower time frames. So back up into the weekly chart. What am I expecting for this week in dollar index? And what's this going to set the tone for in terms of risk on or risk off? So looking at this here, like I said, we've traded down through this sell side. What's interesting to note is how we've displaced back higher up into that range, trading back up through these highs. So this is potentially indicating some bullishness to me. However, what I'm going to look for, what I was waiting for in terms of last week and what I want to see going into this week is now we have inefficiencies and liquidity to work with. Liquidity being we took out the equal lows, but now we have a fair value gap above market price. So what I'm going to want to see going into this week is how do we trade in these levels? Do we trade through it, use it as support and trade higher? Or do we trade into it, reject, and then attack the equal lows on the weekly and deliver into the busy? So that's what I'm going to be looking for going into this week, is seeing how we react at certain key levels. So if we trade up into this fair value gap, we get weak, we then attack the equal lows here and reprice into this inefficiency. However, if we do continue rallying and we get a closure above this weekly fair value gap on a daily chart, I will be expecting much higher continuation in dollar index moving forward. So that's what I'm going to be looking at going into this week for dollar index. Dropping into our daily chart now, we're still seeing that bearish order flows we highlighted, got that repricing into the equal lows we were looking for since we've been up here, and then we finally got that. So I told you guys I'm sitting on my hands, I want to see what the market does. And then we traded higher, making a classic Tuesday low of the week, and then expanding higher into this inefficiency. So what we're seeing with these two black lines here is that daily fair value gap, and then that dotted line in here is that consequent encroachment or 50%. So we got a nice repricing up to the inefficiency, up to consequent encroachment. And what I'll be interested to see is how we trade there moving forward. One other thing I did want to highlight here is looking at this fair value gap, which became inversion. We traded down to the low end, beautiful delivery to the low, and used it as support and rallied higher. So this is indicating that order flow is bullish on a daily chart as we're seeing support at discount arrays. So now we're refining what we're looking at even more precise on a daily as opposed to a weekly. What I will want to see is, yes, we still have that purple weekly fair value gap, but here now we have that daily BISI below market price. So if we are going to continue rallying, and this indeed was a shift in market structure, we will find support inside of this fair value gap and continue rallying. Closure below this fair value gap on a daily candle sends us down into these equal lows and into this BISI. So there you guys have exactly what I'm looking at going into this week and how I'm looking to play it depending on what the market shows us. Gun to my head though, getting out of the 50-50, I am favoring higher prices based off all this. And we'll go into bonds so I can qualify what it is I'm seeing with intermarket analysis as well. But as of right now, we're seeing displacement on the upside. As long as we remain above this fair value gap here, we're bullish. Below it, we then attack the sell side below here. So that's what I'm looking at going into this week. Let's drop down into our hourly chart. But before I do so, remember what these levels are. This blue is the daily fair value gap, and the purple is that weekly fair value gap. So looking at the hourly chart, just looking at last week for a bit of context, typical classic bullish week. We had Tuesday low, expansion higher into Friday. What I sent into the Telegram channel was I was interested to see if we'd get continuation lower into these equal lows. And the key levels I took our attention to here was the breaker. And I told you guys that a closure above this invalidates a bearish bias. So I was actually looking for a rally on euro from this, given that we traded higher into this order block, saw a shift in market structure, and now we had a breaker. Just continuing that bearish order flow, avoiding calling tops and bottoms until the market clearly shows us what it wants to do. And then, as I said, a body above this breaker indicates bullishness. So what did I do with that information? Yes, I was incorrect in my bias. However, this provided me a plethora of setups and clarity on the index markets, because how was I able to anticipate Wednesday reversal profile into Thursday and Friday catching sells is because what dollar was showing. Dollar was showing an unwillingness to want to go lower and not showing respect for these premium arrays, which is fine. We just get in line with what the market's showing. We're not trying to wrestle it and impose our will. Market showing it clearly wants to go higher. So then I started looking at premium arrays, daily fair value gap, consequent encroachment, and we continued accelerating higher towards them. So that gave me a clear bias in indexes to expect a risk off market scenario. So that's what I was using last week, some of the reference points I was looking at. And as I said, wasn't really too active in the group, as I'm not interested in sharing analysis, sharing swing trades, especially when things are 50-50. As I said earlier, you guys know we do not look to do that. So with the context of what happened last week behind us, let's go ahead and look into this coming week and see what we have moving forward. So given that we had a bullish week last week, seeing that bullish order flow, If that is to continue, what I would want to see is price remain above this blue shaded region, which is that daily fair value gap. So as long as we remain above this, we're bullish. And how we trade below this low will be interesting. We don't even need to trade below this low. We can trade down into the fair value gap and rally. However, given time first, then price, it is the beginning of the week. So I would expect some type of manipulation and stop run. So it wouldn't be unreasonable to expect the market to come below the sell side, dig into those orders, stop out traders that don't know how to trail a stop, find support inside this daily fair value gap, and then send us higher. So that's personally what I'll be looking for. However, that would be invalidated, as I said, if we get a closure below this fair value gap on a daily chart. So with that, that's what I'm seeing for dollar index. And I told you guys what specific reference points I'll be looking at and that the algorithm will also be referring to moving forward so that we all have that clarity moving forward into this coming week. So with that, let's go ahead and transition into the bond market. So let's go to a weekly chart. Hello, Hanny. Hope you're doing good. Sigma, the low below the fair value gap daily is previous week low. Interesting to see an offset accumulation. Yeah, that's definitely what I will be looking for. Definitely. So I want to see how we react at those key PD arrays, and then that'll indicate to me what we're doing moving forward. So we're on the same page there, Sigma. Momentum Trader, can you briefly explain why bonds are used in analysis again? Please, thanks. Yeah, for sure. That's a great question. Usually I cover that from time to time as we do get some new folks in here. So the reason we look at bonds to qualify what we're seeing in dollar and foreign exchange is because bonds are the driver of the currencies. Reason that we look at interest rates and bonds is because as interest rates go higher for a particular currency, that's going to make that currency more attractive to hold. So money is going to seek that yield into that currency. So for example, we're looking at dollar index. So let's look at yields. So for example, here we've been seeing yields rallying tremendously, all the way from 1.4% to 4%. So without even looking at dollar index, I can know we were rallying during this time just because of that relationship. As the yields for holding dollar increase, money is going to seek that yield, and that's going to put strength into dollar index as it's being bought. Not that the buying pressure is moving it, but the algorithms are all referring to these intermarket analysis just like we are. So with that, what does that help me with? As an index trader, as a Forex trader, I'm looking at dollar to gauge that risk on, risk off relationship. So by using bonds, it gives me an extra view into what the markets are doing on an intermarket level. So that's why I'm looking at bonds, interest rates to qualify what I'm seeing in dollar. And as you guys know, that's why the calls here have the precision they do because of all the work we're putting into it. This is a professional top-down analysis using intermarket analysis to also qualify what it is we're looking for. So that's why we look at the total X-ray view of the markets and why we're not caught off guard by most things. So again, as we were saying, going into the bond market, hopefully I cleared that up, my man. Awesome. All right, so looking at the weekly chart here, I've been sharing that I have been bearish on this chart. What would invalidate that is us trading above this gray rectangle, which is this fair value gap in here. So we saw price trade back up into it, and then we rejected, closing around where we open. So order flow is still bearish. So I do like how we now have relative equal lows, sell side liquidity, and I will expect that to be the draw going into this week. Assuming we see that on bonds, that will definitely put upward pressure on dollar index as well. So let's drop into the daily chart. So here I have these two levels marked, and let me zoom in on this. So here you guys can see these two lines. That's our bearish order block, the last up close before the change in state of delivery. Beautiful repricing to the order block, and then notice the bodies, how they're indicating true narrative, which is that the market is weak as we're seeing the bodies respect these key premium arrays. So with that, I'm still favoring lower prices. I'm seeing this as a retracement. And as I told you guys, what would invalidate my bearish bias is getting above this order block and this gray rectangle. So I'm going to continue trading the underlying order flow that we're seeing, which is bearish order flow. So what I will be looking for in here is these relative equal lows, sell side liquidity from this order block. And as I said, if we see that, that'll definitely give us that confirmation on seeing upside in dollar index. So now let's go ahead and confirm that with the interest rates themselves. So looking at the 10-year yield in here, we're seeing support at this order block, not consequent encroachment, mean threshold, 50%. We're seeing beautiful support at that level and then a nice rally higher. So now we have a propulsion block in here, as it's an order block that traded within another order block. So if we are going to remain bullish on yields, we should remain above this propulsion candle and attack these relative equal highs. That's what I'll be favoring going into this week. And then qualifying that with the 30-year yield, we've traded into this reclaimed order block, which is an order block that's been traded into before. That's just simply being revisited. So reclaimed order block in here. So I would want to see expansion higher from this key level if we are to go bullish in yields. And then that would also send dollar higher as well. So I'm using this to qualify what I'm seeing in my analysis for dollar index, which is also tremendously valuable for our Forex traders as well. So with that, let's go ahead and cover the euro, and then we'll get into what we've all been waiting for, which is the indexes. So another reason that I have a more bearish bias on, or bullish bias, excuse me, on dollar index is because of what we're seeing with the euro. Nice rejection lower off this key level. As you guys know, we've been looking for euro to reprice to this level for some time now, since this weekly bullish order block. And then we got that expansion higher there. Let me take that off. So we finally got that delivered, and then we got that nice rejection lower. So same thing in dollar index. You guys can just look at dollar index as an inverse of euro. As long as we remain, or how we trade there will be indicative of inside this weekly fair value gap. So if we use it as support, we could go higher. If we get below it, then I will be favoring lower euro. What's interesting about this price action here is we're seeing a 3 drives pattern. So I would want to see how we trade at this high here. Do we use it as support? Reason being is because true support and resistance occurs when there's a fair value gap. So if we are going to go bullish, I would like to see a reaction from here. If we get below this swing high, then that would indicate a sell program to me. And then I showed you guys what I'm going to be looking at to qualify that bias using dollar index as well as bonds. So that's it for euro. Drop it to a daily. So had a nice swing high form on the daily chart. And then just as we saw on dollar index with that Tuesday classic low of the week, we then saw that here on euro, and then repricing to the low end of that volume imbalance into this daily fair value gap in here. So as I said, for the euro traders, look at what I said for dollar index, monitor that early on in the week, and then that'll give us that bias moving forward. So now let's go into S&P. Let's go over to this one. So interesting dynamics that we're seeing here in the index markets. Been rallying for quite a while, and now we're in a deep premium. So what I was interested to see is how we traded at these premium levels. I told you guys my bias is pretty much 50-50 on indexes, as we've gotten objectives that we've been looking for months now. So once we see that, I like to take a neutral position and allow the market to show its hand. I'm not forcing the market to do anything. That typically never ends well. So we just wait, allow the market to show its hand, and then we move from there. So seeing how we traded at these premium levels is interesting. So zooming in, looking at this yellow box, or orange, whatever you want to call that, within that gray box, that's our liquidity void. So what's interesting to note is how the weekly candle expanded higher, traded off those highs, and closed here. So the bodies could be indicating that we are likely to see a reversal. So the reason I'm able to qualify a reversal in S&P is because I'm using dollar index to gauge that market breadth. So because we're seeing that bullishness in dollar, that's going to allow me to trust sell models and sell programs in the S&P as a result. So just looking at those lines, those are just gradients. So 25, 50, 75%. So seeing how we traded up to the lower 25% and rejected that is indicative of bearishness. As you guys know, I'm not trying to call a top in this market, so I'm just sharing my opinion with what I'm seeing and how we're trading at these premium levels, as it could be indicative, and then we'll have more refinement as we go through the time frames. So with that, what I would want to see into this week, if we are going to be bearish and trade softer, assuming dollar trades higher, I would want to see us trade down into this fair value gap and into this propulsion candle. How we trade inside of these discount arrays will be indicative of where we are going moving forward. So with that, that's what I'll be watching on a weekly candle. Some key levels to mark out will be this wick, 50% consequent encroachment. We want to see how we trade there. And then obviously this fair value gap here, which would be this candle's low, this candle's high, this inefficiency. We want to see how we trade at these key discount and premium levels, as that'll be influential moving forward. So with that, let's drop down into a daily chart and refine this further. And then I will include Nasdaq analysis in here as well. As soon as I finish with S&P, we'll go ahead and take a look at Nasdaq. And then we have quite a few Nasdaq traders as well. So looking at S&P, zooming in on this price action. So we had a swing high form. So whenever the swing high forms on a daily chart, I typically have a bearish short-term bias, just because typically when a swing high forms, we'll see retracement, as we see here, swing high, retracement, swing high, retracement, and then the same thing on the opposite end. Swing low, rally, swing low, rally. So I'm using that to qualify my analysis using market structure. So seeing that we formed this swing high on the daily chart, I've been looking for lower prices going into Friday, and that's what I'll be looking for going into this week. So looking at the fair value gap in here, what's interesting to note is how we traded down into it. Bodies closed beautifully on that level. So totally random price delivery, not an algorithm at all. Beautiful reference right to that key level we've been looking at. And then what's interesting to note is how on Friday we closed below that. So the fact that we closed below that fair value gap after repricing higher, being unable to sustain that, and then immediately rejecting lower. Another thing I wanted to note here is that we are rejecting, and this could be forming a potential order block. Given that we've traded through that opening price, I'll be interested to see if we find difficulty rallying through this level. So what I'm getting at here is if we are going to remain bearish going into this coming week for S&P, this swing high should stay intact, and it should be an intermediate term high or long-term high based classified on an hourly chart. But given that we traded up higher on Friday, rejected, we're unable to sustain that, that is indicating weakness to me. The invalidation level is this swing high. If we get above this swing high, then we're likely going to continue higher, and I'll just simply get in line with what price is showing. So what I would be interested to see going into this week is how we trade inside this down close candle. Accelerating through that down close candle takes us into this fair value gap in here at the 45.25, and then all the way down into the 45 even into this old order flow in here is what I would like, assuming we start accelerating on the downside. And then, as I said, the invalidation level for bearishness is getting up through this bearish order block and the swing high. So that's what I'll be looking at for the S&P going into this week. So let's go into the Nasdaq and let's look at the continuous contract. So Nasdaq looking very heavy. We've traded higher into this order block we've been looking at here. So this down close, extend this wick through. We're seeing price traded up into it. We've been unable to sustain these levels, and then we had a bearish close on the week, seeing how we took out previous week's high, immediately pulling back into the range. So seeing that weakness within this bearish order block where institutional selling occurs, I would be interested to see if we do see some type of reversal here. That reversal will, of course, have to be qualified with dollar index, so I can't put enough emphasis on that, is if you want to have precision, if you want to trade and call markets and have the forecasting abilities that we show here on a consistent basis, you have to look at more than just the market you're trading. So I'm confirming these things with dollar index, and that's what I will be looking at moving forward. So seeing here how we have this fair value gap, down close candle, how we trade there will be influential. If we get through it, then we're likely repricing down into these inefficiencies here in the 14,000s. However, if we find support here, then we absolutely could continue higher on Nasdaq. Looking at a monthly chart, trading into this fair value gap in here, I'll be interested to see how we close on this month, because this monthly fair value gap has been a draw. We had that delivered into June, and then now we're trading at premium levels. Order block, fair value gap, and how we trade here will be interesting to see moving forward. Not looking to call a top in the market, just saying that we are seeing quite a few weakness signatures. Looking at the daily chart here on Nasdaq, as I said, this market is looking much weaker as it has been the strength leader, so that would make sense. Seeing how we formed that swing high, as I said, swing high gives us that bearish bias. So Friday, beautiful setup, taking out previous day's low into this inefficiency. So how we trade in these key levels is what I'll be monitoring moving forward. Do we find support here to then continue rallying to new all-time highs? Or do we trade up into this fair value gap, find weakness, and trade lower? So going into this week for Nasdaq traders, you want to definitely have these key levels marked, this fair value gap in here, and this fair value gap. And then how we react within these key premium or discount levels will be influential moving forward. So I would definitely have that noted on your charts. And I think that's going to go ahead and wrap up the pre-market forecast for what I had to share. So with that, I'll go ahead and get into some questions now. And then I remember I had a question regarding silver bullets, and I said I would cover an example that I traded on Friday. So let me go ahead and check the chat real quick. Madara, what are your thoughts on fair valuation? Also, what is the epitome of your model? Is it PD array? Is it a specific type of move? So my models are all based off time and price. So I'm looking for specific price elements to align with time. Now, what are those price elements? That has to do with liquidity and efficiency, where we're at in the weekly range. Are we in discount? Are we in premium? So there's other things to consider within that. But simply put, I'm looking for time to align with specific prices, and then I'm using that in my models. And simply put, that's all I'm looking at. Popa Vlad, ELGD USDT. Yeah, let me take a look at that. ELGT USDT. Oh, ELGD. Excuse me. I'm afraid I'm not able to find that asset, Papa Vlad. ELGT USDT. Yeah, I'm not able to find that, brother. If you can go ahead and send me another ticker, maybe I'll be able to pull that up, and I'll go ahead and take a look at it for you. Ryan, when possible, please don't forget the silver bullet model. Appreciate the reminder. So, yep, let me go ahead and cover that and share what I look at, and I'll cover an example that I used here on Friday in S&P. So, looking at what I already shared, you guys understand why I was looking for lower prices on S&P. Given that we had that swing high form within these premium levels, the bodies are unable to get above this lower quadrant. So whenever we break up inefficiencies into quadrants, the algorithm will refer to these very specific levels. So the fact that we weren't able to get a body closure above it, and then we formed a swing high at this key premium level, then gave me a bearish bias going into the week. And then I was discussing with some of my colleagues in the Telegram channel, and we were discussing how order flow was bearish on an hourly chart, and these are all the components that went into my analysis. So with that, that covers what we're seeing on a daily. Let's drop down into our hourly chart. So there's that long-term high that I shared, high of the week on Wednesday, displacement shifting market structure. So what I was looking at going into Thursday was how we traded inside this fair value gap. So we have this fair value gap here, and just encompassing this volume imbalance as well. And then we saw weakness within this. So that confirmed this is also 2022 model, buy side taken, shifted market structure, fair value gap, attacking a discount for an easy bread and butter setup. But looking at that, I'm using this to qualify order flow. So seeing how we rejected these key levels, order flow is now clearly bearish. We're seeing dollar also rally. So putting all these things together, I'm going into the market looking for lower prices. So looking at Friday's trading, not the cleanest delivery, and how could we have expected that? What's a Friday? So looking at it being a Friday, there's no news. So given that there's no news, let's look at that daily chart. We ended up having an inside day. And an inside day simply means it's a day that did not breach the previous day's high or low. So we had an inside day, pretty much a consolidation range bound day. How could we have predicted that? Understanding how to read the economic calendar. So no surprise to us, seeing that it was pretty much a consolidation day. But is this tradable? Absolutely. And I'll go ahead and cover some of the setups that I traded here. So let's send these to the back to get this cleaned up here. Send it back. And then, all right, let's take some of this off, clean up this chart. All right, perfect. So, all right, so going into Friday's trading, I had a bearish bias given everything we were seeing here, extending this inefficiency through, seeing how we traded up into it going into 9:30. So we had our Judas swing manipulation, creating our high of the day in the opening range when we would expect. So seeing that rejection there, what I'm going to be covering is the PM session silver bullet. So we're going to be looking at these last two down close candles on the hourly chart and this expansion lower, and that's set up into the AM session lows. So with that, let's drop down into our 15-minute chart now. So let me take this hourly fair value gap off. So looking at this here, looking at the range that we're trading within, going into Friday, what was I looking at? So here we have a balanced price range where we have the two fair value gaps overlapping. And notice how this makes our high of day. So because the algorithm stops here, referring to that level, and then displaces lower, that's the confirmation or the tipping of the hand that order flow is still bearish. So what I'm looking at in here, the bias for the morning was pretty easy. What I'm toggling now is regular trading hours. So we see how we opened up with a gap higher. So we opened up with a premium. So with that, let's go back to electronic trading, and that's denoted by these two orange lines here. So that gives us a clean bias going into the AM session, opening at 9:30. Nice repricing right to that regular trading hours low. So that's a beautiful silver bullet. But let's focus on this PM session setup in here. So we've already confirmed order flow is bearish. I shared what it was I was looking at, how I use dollar to qualify that. So now let's go into our 5-minute chart. So let me take off the regular trading hours. Let's clean up this chart some. Perfect. So looking at this daily fair value gap high, daily fair value gap low in here, that's a fair value gap in a daily chart that we're just trading within. So yes, on an hourly chart, this looks like slop. It looks like consolidation, but there are still trades within this if you know what it is that you're looking for. So given that we had a bearish morning, all this dead time, which is New York lunch, and then at 1 o'clock, we start the PM session. So if I'm looking to be bearish or I want to see lower prices in S&P going into the PM session, I want to see some level of manipulation going into 130. So what do we have here? Relative equal highs here and here. And this is cleaner on a 1-minute chart. We can see this. And that's just some of my journaling. But here we can see these relative equal highs much cleaner from the AM session. So high here, lunchtime, engineers another equal high, which is perfect for us as counterparty if as smart money traders we're looking to go short. So what I'm looking at going into the PM session, this is all that's going into my silver bullet trade, which is that expansion within this window. So we're looking at 2 to 3 o'clock, that silver bullet window. So going into the PM session, I want to see how we trade above lunch highs. So lunch highs engineers that liquidity, we run up into it. That's our Judas swing for the PM session, also offering a premium for smart money. So looking at this on a 15-minute now, one other thing I didn't want to share is we have an order block in here. That last up close where institutional selling occurred before the move down, that up close candle, the algorithm is going to refer back to that. What level? The opening price. So beautiful repricing at 130, exactly when we're expecting the Judas swing. So that's where time, then price comes into play. So repricing to this order block on a 15-minute. Let's go back into our 5-minute chart. At the same time, offering smart money premium valuation above buy side into this inefficiency, and our attention is down here at these relative equal lows. Why? Because we're bearish top down. Everything's indicating we're going lower, and then we just continue refining this throughout the time frames. So looking at we traded higher to this 15-minute fair value gap, which is now shown here on, or fair value gap, excuse me, order block on a 15-minute, which we're now looking at here on a 5-minute chart. Beautiful repricing, and then we get a rejection of that level. So when I'm looking for 2022 models, when I'm looking for silver bullets, I'm looking for reactions at very specific levels. I'm not just looking for patterns, because if you're just in here looking for patterns and claiming you're smart money trader, that's retail. We're not in here just trading patterns. We need narrative behind these patterns to make it effective. So as I said, dropping back up to the 5-minute real quick, the narrative is we're bearish. So if we're bearish, what do we want to see? Stops taken in a premium. At what time? 130. To then reprice lower into what? The sell stops below the AM session lows and lunch lows. So PM session will utilize lunchtime liquidity in its delivery. So that's one target, and then the other target was a new low of day into the AM session. So now dropping down into our 1-minute chart, keeping in mind what these levels are here. So this is where we traded higher into that 15-minute order block. At the same time, we took out buy side. So relative equal highs have been purged in a premium. So we have premium valuation when we're looking for lower prices, and then we see a displacement. Shifting market structure here. There's no fair value gap in this price leg. So this would not constitute a 2022 model. You have to wait for the next market structure shift, which is the displacement here, trading through this low. So now we have 2022 model in alignment with the silver bullet. Silver bullet is within this window from 2 to 3. So now I have my drawn liquidity, which is number 1, and then I have time in alignment. Actually, that should be the other way around. I have time in alignment and I have my drawn liquidity. So now everything's a green light for me to execute on a silver bullet trade. So seeing that we displace lower, clearly showing a willingness to want to dive lower, we then have a mitigation block in here overlapping with this fair value gap. So the first fair value gap that forms within 2 to 3, that's the one I'm going to be looking to short within this window. Obviously, the fair value gap can form below or before 2 o'clock. However, this is the one I was looking to trade. So I sold short in here, partial 5 handles, and then closed the rest of the position below sell side liquidity. The reason I didn't need to hold out for these AM session lows in here is because, as I said, it's a Friday, there's no news, so I have to manage my expectations in alignment with a narrative that I'm looking at within price delivery. So that's the silver bullet trade. It covered some examples, what confluences I look for when analyzing and executing this model. So hopefully that was helpful for you, Ryan. Mad Joker, good night. Thanks for joining us, my man. Francisco, GBP AUD. Yeah, absolutely. Let me go ahead and take a look at that. GBP AUD. GBP AUD. Let's get the weekly chart. All right, so looking at a weekly chart, we are seeing bullishness here. Order flow is clearly bullish. We just took out these clean highs in here. But as I said, we're still seeing bullish order flow. So what we saw last week was trading down into these consecutive down close candles, which is our bullish order block. And then we saw a reaction higher off that. So what's interesting to see is how the bodies are respecting the fair value gap, the order block. So to me, everything is still bullish on GBP AUD on a weekly chart. So let's refine this down to our daily. Traded below short-term sell side in here, looking at our dealing range from high to low. We've also offered a discount. So whenever we have a bullish market, we want to see discount valuation traded away from immediately. So we want to see price spend little time in discount valuation. So we traded down below the sell stops, offered discount, and immediately repriced higher. So what I will be looking for going into this week here will be us remaining above this balanced price range. So looking at these two fair value gaps where they overlap, with this one extending this through, look how the bodies are beautifully respecting that, wicks doing all the damage. So moving forward with GBP AUD, further refining what we're looking at, if we are going to remain bullish, price should remain above this balanced price range. Getting down through that on a closing basis takes us into this down close candle in here. Acceleration through that takes us into these relative equal lows for GBP AUD. So that's what I'll be looking at going into this week for GBP AUD. And then Tommy, my man, when you're watching this, if you have any suggestions, I know this is your area of expertise. You can feel free to add to it, my man. Popa Vlad, EGLD. Okay, EGLD. Okay, I see it. Awesome. All right, let's go to a weekly. Yeah, so typical crypto price action. All right, so nothing much here on a weekly chart that's giving me insight. Let's drop into it daily. So deep discount, which pretty much the whole crypto market is in right now. We've traded higher off the lows, finding support. This isn't a market I'm really interested in trading or even calling out, because if I called out markets like this, my precision and record would not be what it is. So with that, what I will be give you moving forward, Popa Vlad, is how we trade inside these key levels. So we have a fair value gap in here below market price, and then we have one above market price. So if we are going to be bullish, we should get above this and use it as support. If we are unable to get above this daily fair value gap, look for the sell side here and for us to trade down into this fair value gap here. But other than that, not much more on this market, just because the charts aren't that clear. So hopefully it helps you out. Ryan, you're the best. Thanks, bro. I'm glad that helped, my man. Thank you. Miss Solomon, please, Dylan, briefly explain to us how to use the economic calendar into the technical analysis and possible weekly profiles. All right, so that's a pretty loaded question, Solomon. That's something that would be a whole lecture teaching how to use economic calendar. But simply put, economic calendar allows us to predict consolidation, what type of market environments we're going to be seeing. So for example, how I used that on Friday, we had ES, which was a inside day within the previous day's range. So how am I using the economic calendar to forecast that? I'm using the days that have no news and anticipating less animated price delivery. So by understanding this, we're not caught off guard. And then, for example, like days ahead of FOMC, days ahead of CPI will typically manifest typical similar conditions. And then you can also use it to predict, for example, when the Tuesday high of the week, all these templates, for example, Wednesday high of the week, that is highly contingent upon the economic news calendar. So without getting too much into it and turning this into an entire lecture, that should be something enough to go in and study and back test. So hopefully that sells you out. Hope Vlad, hope, yep. EGLD, yep, we read it wrong. We're good. Don 1, this dude is good though. Appreciate it, my man. Thanks for joining us. Rich, we also rejected 830 New York 2 times. Yep, absolutely. So in S&P, rejecting key price levels, you can definitely use that in analysis. So Madara, what are your thoughts on fair valuation and how do you use it? Fair valuation in terms of like fundamental analysis or with dealing ranges in terms of premium discount? You're gonna have to refine that question a bit for me, please. Momentum Trader, I caught this move down on MNQ for $90 move. To really like how they left the external range liquidity untapped all day, engineered liquidity 2 times, then ran it. Yeah, Momentum Trader, was a beautiful setup, beautiful priming, putting all the liquidity, all those victims below those lows, and then bashing through it like the SWAT team going into the PM session. Beautiful delivery overall. Awesome, my man. Glad to hear you caught that. Daniel, great. Thank you from UK. Thanks for joining us, my man. Madara, silver bullet move. Gold, concise but fruitful move. Awesome. Glad to hear it. Popa Vlad, thank you, bro. I know crypto is choppy. I don't trade crypto, but I want to buy EGLD long term. Awesome, my man. Cynthia, great job, Dylan. Appreciate it. Have a great week. Earl, my man, thanks for joining us. Glad you're doing good. And hope you have a great week as well, brother. Denisha, appreciate another silver bullet breakdown. Glad it's helpful. Glad it's helpful. Mayoa King, awesome. Thanks for joining us. Roshan, what about gold? Popa Vlad, great analysis. We'll look at the same levels. Awesome. So yeah, let me go ahead and cover gold. I know we have quite a few gold traders in here. And David, my man, I know if you're here, I know you're definitely going to be paying attention to this as well. So I left you off on gold a few weeks ago. I don't trade gold because 4 weeks ago, we're talking about price levels and we're still at those same levels. That's not a market that interests me. But I do remember leaving you guys off with this. We had this balanced price range on gold. And I said we're bullish as long as we remain above it. If we get below this balanced price range, we then go bearish on gold. So as I said, we have a beautiful draw on liquidity, which is these equal highs. And we had this balanced price range. So I said if we were going to go higher on gold, we should find support here, and which we did beautifully, and then we've rallied higher off that. So dropping down into our daily time frame with the same level transposed, we traded down to this level, bodies respecting it, using it as support, and then we've displaced higher, fair value gap, traded into it, rallied higher. So order flow is bullish with what I'm seeing here. We have this last candle closed beautifully where at the fair value gap. So as long as we remain above this fair value gap in here, we can trade down into it going into this week. But as long as we remain above this, we're bullish. If we get a closure below this fair value gap and start accelerating, we then turn bearish on gold. So analysis playing out as we expected, support at the fair value gap, seeing bearish order flow, order block, support, fair value gap, support, fair value gap. I would want to see this supported if we are to go bullish. However, as I said, if we accelerate through it, then we likely see more downside on gold. Oh, and another thing, I did want to cover crude oil. We have been smashing it on crude oil. So looking at the weekly chart, we've been calling this thing higher as we've been bullish. Covered several factors. One, looking at this consequent encroachment, finding support at that wick. Remember, the algorithm refers to wicks as inefficiencies. Finding support at that 50% level. So shared that. Also in concert with this monthly chart, we're also in a monthly bullish order block. So monthly, weekly, taken care of. Down to our daily chart now. I covered how we traded into this rejection block, sweeping the lows, unable to displace through, indicating that we are bullish. And then we see that displacement on the upside. Told you guys in here, bullish breaker. If we are going to go higher, we'd use it as support. Monday, randomly open, traded right down into that level. Beautiful expansion higher. Going into last week, closed here on Friday. I told you guys if we do remain bullish on crude oil, we will find support inside this order block. Monday, trade it lower, right down into that order block's opening price. So beautiful delivery for crude oil now that we're moving. I don't care what it's doing in here. Like I told you guys before, I was getting asked quite a bit on crude oil and we were in here. I have no interest in this market when it's doing this. I'm not able to call it like I am in here, and these are markets I'm interested in calling and trading. So the fact that we rallied from the breaker, displacing higher through this buy side, I said going into this week, we'd find support inside this order block and fair value gap. Bodies respecting the fair value gap, trading beautifully into that opening price and rallying. So nice manipulation early in the week, expansion into Friday. So we have these relative equal highs. I'd like to see the algorithm do its thing, clean this up, and then that'll determine if we are going to continue higher. So for crude oil, I told you guys we have a beautiful draw on liquidity here, which is these relative equal highs that I have labeled buy side liquidity. So continuation on the upside takes us into this buy side liquidity in here. So on a longer term perspective, that's what I'm looking at. So for swing traders, do what you would like with that information. Not financial advice, of course, just education in my opinion. Finding support in here, how we trade above these highs will be interesting. I would like to see displacement. For example, how we traded through this swing high, we displaced through it. So I want to see that continuously moving forward if we are to continue seeing crude oil reprice into the high 70s and low 80s. So that's what I'll be looking for moving forward on crude. Okay. Sigma, how do you trade news? I'm still struggling with this. It's hard to give a model to enter. So it's just back testing, my man. You want to see other days with news, how it traded, how the news typically invites some type of manipulation into the marketplace to throw uninformed traders off sides. And you just want to go into your charts back testing with that in mind. News are days we like trading because those are days that have more volatility, which as traders, we're looking for volatility. Olawale, PhD level analysis as always. Thanks, my man. I appreciate that. Adora, fair valuation in terms of technical analysis, like a fair value gap. Awesome. Yeah, so I use fair value gaps like PD arrays. So it's called fair value gaps because it's fair value for the market to reprice to it. Why? Because they're inefficiencies. So if it's an inefficiency, for example, just looking at this chart here on crude oil, this is called a BISI. Why is it a BISI? Because it's buy side. No. Yeah, BISI. Buy side imbalance, sell side inefficiency. So it's inefficient in sell side. So the market can reprice to this as fair valuation. That's why it's called a fair value gap. It's a fair value for buying if you're looking to go long. Same thing on the reverse. For example, here, this is a SIBI. It's fair value to go short if we are trading lower. So that's how I use fair valuation. And then I also qualify that within premium to discount. So whenever, for example, I'm bullish and I see us trade below equilibrium, that's discounted valuation when looking at this through algorithmic principles. So I'm looking to be a buyer below equilibrium in discounted valuation, and that's how I'm using that for my trading. And really just looking at the market through a market maker perspective. Market makers are looking at the market exactly how we are here, and having that understanding of how market makers are booking or putting trades in their books and managing it, that gives us that insight into that with the language that ICT has provided us. So that's how I use that. Rafa, what's up, bro? What's your forecast for NQ? Already shared that, brother. The recording will be up. To tap Joel, please, can one use these concepts when trading volatility 75? So I do not have any experience with synthetics. You can drop that question in the Telegram group. Maybe someone there would be able to help you out, but I cannot. That's not something I have experience with. Solomon, thank you. Hope you can provide us more detail with the video because it's a very useful component of our trading, and you didn't touch it much with the answer you gave, but thanks for your insights. What was that again, Solomon? I'm not sure what you're talking about. Ryan, when utilizing regular trading hours, are you necessarily always anticipating the full fill as long as we are supporting narrative and institutional order flow? So that's also a pretty full question, Ryan. Regular trading hours gap, how to use it, it depends a lot on narrative. A lot of times it'll just come down, fill up to 50% or consequent encroachment in a bullish market and continue higher. So you would use a regular trading hours gap like any other inefficiency. If we're bullish, we want to see support. If we're bearish, we want to see it get below it, use it as resistance, and then trade lower. If we're breaking away from it and not referring back to it, that's indicative that the algorithm's in a hurry to reprice to a specific level. So gap theory, 3 things we look at in gaps. We want to either see it, use it as support, we want to see it get below it, use it as resistance, or if it doesn't refer to it at all, that indicates something in and of itself. High Speed Trading Company, first time here, great stuff. Thanks for joining us, my man. Could you look at UJ? Yeah, definitely. I think I might need to watch this one more time. That's why we put the recording up, Mayoa. Hope that helps. UJ. SDJPY. So dollar yen. It's been a while since I've taken a look at this market. So repricing higher into this weekly fair value gap, and then we've traded softer off that. No respect for this candle, and we're trading back up. So I haven't looked at this market in a while, so give me a moment. Immediate rebalance, order block. So looking at UJ here, moving forward on a weekly chart, you definitely want to have marked out this fair value gap in here. I'll make that. Make that purple. So you want to have this inversion fair value gap marked out and see how we trade here. If we go up into it, use it as resistance, I would then expect further downside on USD JPY. Trading through that, using it as support, we then likely continue rallying to make some new all-time highs here. So let's refine that on a daily chart. Repricing higher, trading into that sell side, and then a nice rejection of it. So we are looking bullish on a daily chart. Trade up into this bearish breaker, no respect for it. And then we ended up using it as support. So as you guys know, every single PD array will have an inversion aspect to it, depending on the state of delivery. So what I'll be interested to see here with USD JPY is I would look at all these inefficiencies and see how we trade there. So I would want to see us, if we are going to remain bullish, stay above this fair value gap in here. Probably should find support there and go higher. We had immediate rebalance here, which is bullish, and we are seeing that there is no inefficiency here. So there's no reason for this market to need to reprice below this fair value gap. So on USD JPY, as long as we remain above this fair value gap in here, I'm still bullish on this market. So that's what I'll be looking at here for UJ. Yeah, Ryan, you want to treat the regular trading hours just like you would a fair value gap. Absolutely. RTY. Yeah, the Russell RTY. So we've traded up. Let's look at. There's futures contract for RTY, I believe. Yeah, there we go. All right, so we've traded higher into this wick, looking at 50%. Nice reaction off the 50% level of this wick, trading up into this rejection block. So that's interesting to note. Let's drop down to our daily. So same thing as the other indexes, seeing the same thing. A lot of sell side liquidity below there. That's interesting. And then refining, looking at this wick in here, we were unable to even trade up to 50% of this wick, which is indicative of bearishness. So given that we have a swing high here, same thing on S&P, Nasdaq, we'll be looking for the same thing, how we trade in these discount levels. Specifically for RTI, or RTY, the Russell, monitor how we trade inside this down close candle, is bullish order block, and this fair value gap. So now that we've closed below it, we're bearish. A closure above this fair value gap, we likely take out the buy side. However, we want to see how we trade inside this bearish order block. So if we get down into it, use it as support, we likely trade into the buy side. If we start accelerating through it, then we have all this inefficiency here, sell side here, and then this eventual sell side down here. So that's what I'll be looking at for the Russell moving forward. Oh, Solomon, so the news, utilizing it for operations on a weekly profile, like going into these weekly, let's say we're bullish for DXY. Yeah, so that's definitely something that is much more in-depth to cover. But I will start sharing more examples of how I use the economic calendar in my analysis. Hopefully that'll help you out, Solomon. So if you have any more specific questions, refer to us in the Telegram channel, and I'll definitely be sure to help you out there. Sigma, thank you. Only that it is difficult to give you a perfect setup like the 2022 model. Maybe I should enter after the manipulation stage in the M1. Obviously having a strong bias. Yeah, for sure. The key to making all these setups high probability is understanding draw and liquidity. This is something whenever I'm training with somebody or I'm working with someone privately, our emphasis is always on draw on liquidity. If you don't understand draw or where the market's going to, none of these concepts will be effective. You'll be lost pretty much like a retail trader, just looking for patterns, hoping it forms. And that's probably why you're not finding success with smart money concepts, because you're trading it with a retail perspective. You need to understand where the market's drawing top down to effectively be able to implement these concepts. So all these entry models, 2022, my A+ model that has a breaker, silver bullets, they all heavily rely on higher time frame bias. So whenever you guys see me doing my analysis, I share trade reviews. Where do we always start? Weekly, daily, hourly, 15-minute. And that's the process I go through every single day before I begin trading. I'm looking at all these time frames, referring to all these key levels, moving forward to have a draw. And then that draw is what allows me to trust the entry patterns. The entry pattern is the last thing I'm referring to after I know where the market's going. So throw that in there. Madara, thanks for the pre-market analysis. See you later this coming week in Telegram, my man. Awesome. Thanks for joining us, Madara. Denisha, don't forget to leave the stream a like if you haven't yet. Yes, please do. That helps us out here tremendously. And then Sigma, yes, of course. We are not chart pattern traders. Absolutely. Right on with that one. Beautifully said. So with that, we did fill up the channel. We got up into the high 50s today live. So thank you all for the support. Thanks for joining us and sharing what we're doing here with your friends, your other colleagues. That's greatly appreciated here. So with that, I think I covered all the questions. So I'm going to go ahead and get going. Thank you guys for sharing your time here. And as always, I'll see you guys in the Telegram. Be sure to leave the stream a like on your way out, a comment on what you thought. And with that, I'll see you guys next Sunday on YouTube and throughout the Telegram during the week. You guys have a good one. Take care. Thank you.